A revised strategic Bitcoin reserve bill introduced in the U.S. House has dropped the previously proposed 1 million BTC purchase target and replaced it with a 20-year lockup period. This shift signals a move from aggressive accumulation to long-term custody. The bill, introduced by Rep. Nick Begich as the American Reserve Modernization Act, restructures the federal approach to holding Bitcoin as a strategic asset. The revised framework now emphasizes fiscal stability and national security over a fixed acquisition target. The most notable change is the removal of the 1 million BTC target, which had defined earlier versions of the bill and generated significant debate among lawmakers. In its place, the bill introduces a mandatory 20-year lockup period for any Bitcoin held in the reserve. This change reframes the conversation from how much Bitcoin the government should acquire to how long it should retain the asset. The original version of the bill was associated with Sen. Cynthia Lummis's earlier strategic Bitcoin reserve legislation, which focused on a defined accumulation schedule. The new House bill moves away from that model entirely, leaving the reserve's eventual size unspecified while enforcing a 2-decade. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Holding commitment. The 20-year lockup would prevent the federal government from selling or reallocating any reserve Bitcoin for 2 decades. This constraint transforms the bill from an accumulation story into one centered on custody and long-term strategy. For lawmakers and market observers, this shift is significant because it reflects a growing emphasis on Bitcoin's role as a strategic asset rather than a speculative or market-driven investment. The lockup period could reduce short-term volatility in government-held Bitcoin, potentially stabilizing the broader market. It also signals a more conservative and measured approach to digital asset policy, focusing on long-term planning rather than rapid acquisition. The bill's revised structure could have implications for Bitcoin's perception as a reserve asset, potentially influencing how other governments and institutions evaluate Bitcoin's role in their own financial strategies. However, the absence of a specific acquisition target introduces uncertainty about how much Bitcoin the reserve will ultimately hold. This could lead to speculation about whether the government will continue to acquire Bitcoin at all, or if the reserve will remain relatively small. The new framework also raises questions about oversight and governance. With Bitcoin locked up for 2 decades, the mechanisms for managing and securing the reserve will be critical. The bill's language suggests that custody will be a priority, but the specifics of how the government will store and protect the Bitcoin remain unclear. For market participants, the 20-year lockup could act as a bullish signal, as it implies that government-held Bitcoin will not be sold into the market for an extended period. This could reduce selling pressure and support Bitcoin's price stability. At the same time, the lack of a clear accumulation target may dampen enthusiasm among investors who. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. We're hoping for a large-scale government buy-in. The next key signal to watch is how other lawmakers and agencies respond to the revised bill. If the bill gains traction in the House and moves toward a vote, it could set a precedent for how Bitcoin is integrated into national financial policy. Additionally, any further revisions or negotiations between the House and Senate could clarify the final shape of the legislation. For now, the shift from accumulation to long-term custody represents a significant pivot in U.S. digital asset policy, with potential ripple effects across global markets.